All right, so I brought up the chart on Conagra Food. So this is a very boring stock. You won't really find this stock in the news, but it is a very important stock because Conagra brands, when you go to the grocery store and you read small on the label, they own a lot of the different brands that are sold at the grocery store. I mean, they are a good portion of the foods that we buy and eat from every supermarket out there. So notice that it just likes to go sideways. The investors love that Conagra gives a huge dividend, about 1% every quarter, which means that for a year, if you just buy some Conagra, you're going to be making 4% plus on your money, which is not a bad thing for owning this stock. And so a lot of folks are just perfectly happy. They're not pushing the board of directors of this company to do anything better. If you look at the Conagra sector, you'll notice that it also kind of just goes sideways because again, that whole grocery store, it's a necessary thing in our world, and so the businesses are going to keep going. There's no fear in those businesses, making the next best product or anything like that. We just got to eat, okay? And so what's neat about this is you're coming down here at a low. And so this is a perfect time, as we've all been taught, this is a perfect time to be buying stocks. If we don't want to buy the stock, we could actually buy a back month deep in the money call option. It'll act exactly like the stock, but it'll be at a cheaper price. So we'll incorporate a little bit of leverage into this. And so we set up this initial position that will profit as Conagra Food goes up in price. If you buy the stock and Conagra Foods goes up in price, great, you'll make some money on it. If you buy that back month deep in the money option, call option, it too will do the same thing as Conagra goes up in price. So will that back month option. When Conagra gets to a point where it's kind of hitting this level of resistance, one of the things we can do, and we don't have to be spot on with this, and it depends on if you're trying to get this trade to last a long time or if you're okay with just setting up your protective position. But one of the things we like to do when we buy stock is set up some sort of protective put option trade. By buying this put option, we're guaranteeing that if the stock goes down below that price, whatever the strike price of that put, that we'll have a position that offsets any losses that we have. It's called a protective option. And we generally buy those options 3 to 6 months out. And that allows us, a peace of mind, right? But here's the scoop. If you buy it when Conagra is down near that level, it's going to be expensive. And you won't be able to sell it back later for any more of a profit. You'll probably, if you can sell it back at all, it'll be for a little bit of a loss. So, what I like to do is I like to find symbols that are going to have a little bit of upward movement. And again, it doesn't matter how much, especially if you don't care, whether this position lasts for many cycles or not. Just a little bit of difference, a little bit of upward movement, and that's a much better time to buy your protective option. That way, that protective option will be a lot less in cost. The other thing is if I get it where there's a top being formed, I can also sell some premium, right? I'll sell a call option, a near term at the money call option. Those near term options, they tend to make a lot of money on time passing by. And I'll error to a little bit above where that top is forming. And that'll help me, if not pay for that protective option completely, it'll offset the cost of that protective option even more. So now I bought that protective option at a discount already because I waited for the underlying symbol to get farther away from its strike price. But I've also now sold some premium and I can apply that money towards the protective option. The beautiful part about that is as the stock now starts to fall back down, as Conagra tends to do, that protective option is going to go back up in value. And more than likely, Conagra is going to stop. And it's not that protective option is going to protect us should it break through that level of support. But listen, history tells us that that support is going to hold. So if it doesn't hold, great. The protective option kicks in. We make a ton of money on the protective option and we get to keep that initial Conagra or back month position and all is great. But if it does what it's done in the past and kinda stops at that level and starts to go back up again, now we're gonna be able to sell that protective option, that one that we had a discount coupon against for like 4 times its value, 4 times our break even price, and really make a killing on that protective option. And that premium we sold will most likely, if we are selling it near term, it'll most likely expire worthless, so we won't have to worry about any sort of obligation. And so we can do these trades that when we've got the premium sold and the protective option purchased with those different strike prices, we create kind of a trade zone and that stock automatically adjusts. If we go above the trade zone, we get out at a max profit, we get exercised automatically. It automatically adjusts because of the option we sold. If it goes back down, then the protective option kicks in. It automatically adjusts because of the protective option we sold. In either case, we create a rock solid trade that we don't even have to think about. It's going to take care of itself. And all we have to do is check in on it every evening. Once it modifies itself or expires worthless, we just reset it and do again.